Hi everyone, welcome back to Level Up with Dawn. Today in this video, I'll be talking about credit, what goes into your credit score, and how you can improve it. So let's get into it. So let's first start off with credit. What is credit? And I found a definition that I want to read to you so that I get it completely accurate. Credit is the ability of a customer to obtain goods or services before payment based on the trust that the payment will be made in the future. So there's two aspects to this. There is getting the goods before payment, but then there's also trust that you will make that payment for those goods or those services in the future. And so then that leads me into what is your credit score? And basically, based off of the definition I just gave you, that is how much you are trusted to pay what you're owed. Unfortunately, when it comes to credit, unlike relationships, we cannot give the benefit of the doubt and trust until we can no longer trust you. With credit and with financial institutions, you need to prove that you're trustworthy before they can trust you. And that's why, in order to have a credit score, you do need to have some sort of credit. And that can be in the form of a credit card, it can be a clothing store account, it could be your cell phone contract, it could be your insurance policy. Obviously, it could be a bond. As an adult or as a person who will be making purchases and big purchases in the future, having a credit score is very important. But on top of that, having a good credit score is very important because, again, it's that trust. If people don't trust you to pay your bills, if people don't trust you to pay back the money you owe, then they're not going to give you that money in the first place. And unfortunately, we don't get the leeway to get the benefit of the doubt, but then that also protects us from putting ourselves into situations where we are over indebted, we have too many bills to pay, and we just drowning in it. So now you have the clothing store account, or you have the cell phone bill, or you have the credit card. Now what do they look at? They look at your limit. For example, if you have 10 clothing accounts, that does not look good. Why do you need so much credit for clothes? Why do you need 10 times the budget? Why are you applying for credit so much? And that is a red flag, first of all, to the people who are looking at your credit. Secondly, if you're looking, let's say, a credit card, they look at, let's say you have a 20,000 Rand limit and you have used up the 20,000 Rand and you are paying the interest that you owe every month, but you staying on that 20,000. You never go back to maybe 10, maybe 5, maybe 0. You just stay owing that 20,000. And it appears as if this 20,000 is just funding your everyday life. That's a red flag, because exhausting all of your credit and not being able to bring it back means that you could be living beyond your means. You are essentially spending more than you are earning because you are living perpetually in credit. And also, if you have multiple credit cards, why why do you need so much money? What makes it worse is that this is just straight money. It's not money to buy a car, it's not money to buy a house. It's just money, and you can do with it whatever you want. You can go and spend it in the club, you can go give it all to church. They don't know. And that's where the risk is. They don't know where you are spending that money. And so that's why you find credit cards have a much higher interest rate. Another part of your credit record that may look a bit suspicious is if you have a lot of hard inquiries. So a hard inquiry is when you apply for credit somewhere and that institution looks up your credit record. So if you yourself look up your credit record, that's not a hard inquiry, that's considered a soft inquiry. If an institution looks up your credit record in the hopes of providing you with credit, then that would be considered a hard inquiry. And if you have a lot of those, then that is suspicious, and that brings down the trust level. It raises the question if you can afford the lifestyle that you're currently living, and if you can't and you're seeking credit, how can they trust that you'll be able to afford to pay them back? What you can do, and also what you need to stop doing so that you can have a good credit record. Firstly, you need to have at least 3 lines of credit in order to have a credit record. So that's 3 instances of you demonstrating that you are owing money and paying it back. So either it could be a car loan, home loan. Well, home loan you can't get without a credit record, so we'll leave that for now. It could be a credit card, it could be a store account, it could be your cell phone contract, and those will help to demonstrate that you do have things that you owe and you're paying them back. Secondly, whatever you do have that has monthly payments, do not skip payments and do not make late payments. It doesn't matter if you make the payment a day later than it should have been, it's still considered late. And technically, it is considered default, because default is defined as the failure to fulfill an obligation. And when you do take out, let's say, a clothing store account, you are obligated to pay that account on stipulated days every month. And if you don't, then it's considered default. So do not pay late, even if it's one day. Make sure you pay your bills on time. Another important thing is, do not max out your limits. If you have a credit card, please use less than 50%. Even better, use 30% and lower. That makes you look really good, because you have access to cash, but you are not tempted to use it. You do not go beyond your means. You do not use money for the sake of it just being there. And that looks good, and that builds up the trust that financial institutions will have with you to pay back the money that you owe them. Often people talk about having good credit is an important thing to have as an adult, and some people may not. And granted, you may not need credit, but the only instance in which I can see that happening is if you decide to pay for everything cash, because the trust is in the cash. And if you don't have the cash up front, then the trust has to be in you. And how do they quantify that? Through your credit record. If you don't have a credit record right now, consider if you are going to be making large purchases. If you do want to buy a house, if you do want to buy a car, then you will need some time to build up your credit. I suggest starting off with a credit card. Get a credit card, but then hide it somewhere. Like, throw it under your bed, throw it over the wall. Don't use it, or at the very least use very little and then cut it up, or just make sure you train yourself to use it properly. As much as it's annoying to have to monitor your behavior around money for the approval of other financial institutions and outside people outside of your home, these habits are really good to foster, and they will carry you in good stead going forward. Thank you for watching. If you enjoyed this video and you want to see more content like this, please subscribe. Also, please like this video and share it with someone that you think will enjoy it. And I will see you in my next video. Bye.